Hey everybody, it's Jeremy Whaley here from Trade Maestro. I hope you're doing absolutely fantastic. And I wanted to address a subject that has become pretty hot lately, and that is, how do you choose a broker? How do you choose a broker? Now, why is this a hot topic suddenly? Well, it's a hot topic because we've seen some stuff with like Robinhood and some of these brokers who were saying they were, giving you free trades and, really working for the little guy. But it turns out there's some backroom deals going on. So how do you know? How do you know that you're working with a good broker? Well, I've put together this video to help you understand exactly how you can choose a broker. And I'm also going to give you my recommendations, the brokers that I like to work with. And I think you'll find some people in there that are probably worth you working with as well. All right, so let's get started here. First of all, let's answer a question. Why is a broker important? Do I even have to have a broker? Can I just go find somebody else? I mean, what's the old joke about brokers? They're broker than I am. That's why they're called brokers. All right. So why do we have a broker? Well, first of all, we have a broker because they bring you to the party. What do I mean by they bring you to the party? Well, listen, folks, you and I, we can't just walk into onto Wall Street or anywhere. We can't just log on the computer and start buying stocks and options and all this great stuff. We have to have a broker that actually gets us in the door. They're the ones that, like I say, bring us to the party so that we can participate in the market. So they're very much an important player, and you really should look at them as the intermediary between yourself and the market. Look at them as the intermediary. Now, think about it this way. You have the market. We have the exchange. That's where all this stuff is transacting. That's where it's all taking place. You have the market maker. And the market maker's job is to really provide liquidity for the market so that if you go in, you say, I want to buy a stock, the market maker is going to be sitting on the other side saying, well, I'm going to sell it to you. And they're over here looking for somebody that they can get it from. And they're literally making the market. They're facilitating the market. And if you do a market order, whenever you place a market order in your trades, typically that's going to get filled immediately or pretty close to immediately by one of the market makers, because that's their job. Their job is to literally make the market. Well, the broker is the one that brings you to the market maker. So you come to the broker, you say, hey, I want to place my trade. They put it into the system. That order goes to the market maker, and then the market maker is the one that goes and finds the person that's selling it. Or if you're selling a trade, they go find somebody that buys it. And they're literally bringing all this stuff together. So that's what the broker does. They are the intermediary. They're the ones who bring you to the table. They bring you to the party, literally. And if it wasn't for them, then you couldn't be participating in this great thing that we call the stock market. So now you kind of understand how the brokers work. Let's answer the question of what makes a bad broker. Well, there are some naughty brokers out there. Not all of them are intentionally naughty. Some of them, I think some of them are intentionally naughty. I don't know. I can't prove that. But I can give you a few tips on what to watch out for. First of all, the number one thing I hate about brokers is when they just aren't trader friendly. You say, well, how can that be? I mean, how can a broker not be trader friendly? Well, they don't really care that much about you. They care a lot more about their business, care a lot more about their bottom line. And consequently, you might call them, you're trying to talk to customer service, and they don't think like a trader. And you'd be surprised how many brokers don't think like traders. It's really a very common problem, especially with customer service. You get on the phone, you need some help with something, and they're not thinking like you. And that's really, really frustrating. They have platforms that don't think like you and blah, blah, blah. So first thing that makes a bad broker is they just aren't trader friendly. They don't think like a trader. Next, I really hate this whenever a broker limits your ability. Now, I haven't had this problem firsthand in years because I've been trading with good brokers for the last, many years, 15 plus years. But I deal with it with my students all the time where they say, I want to trade this strategy, but my broker won't let me. And I just hate that. I absolutely hate it whenever your broker is limiting your ability to do something. Now, the thing that's equally frustrating to me is when my students don't switch brokers. I think if your broker's doing this to you, if they're limiting you, if they're not helping you do what you want, you should just switch brokers. That's my opinion on it. But from a broker selection process, the key here is to find a broker who will work with you. They're going to think like you as a trader. They're going to actually let you do what you want to do. They're not going to limit your abilities. The next principle, the next thing that makes for a bad broker is incompetence. You say there's no way a broker is incompetent. Oh, yes, there is. I can't tell you how many times I've called brokers and ended up with, some sort of a representative on the phone, and I'm trying to do something and they're just lost. And that just drives me absolutely nuts. I'm not going to mention any brokers by name, but there is a broker in particular Every student that I've worked with who's worked with this broker, my own mother had a trading account with this broker, and I had to call and try to help, and these people were just totally incompetent. And they are a huge broker. If I told you their name, many of you are probably trading with them, so I'm not going to be mean. You'll just notice that they're not on my list. Yeah, basically, a lot of brokers, they're not really thinking about you. They're thinking about their bottom line, and they're not very trader friendly. They're limiting your abilities to do the stuff that you want to do. They're worried about their liability, not your opportunity. They're kind of incompetent. A lot of weird stuff like that. And then another thing that you see with brokers is you see that they're some of them are charging high commissions, and a lot of them are actually quite arrogant. They say, well, we're better than everybody else, so that's why we can charge more. Now, that's been changing a lot. The likes of Robinhood and, free trades and stuff. A lot of this stuff has really changed the market, so you don't have some of the high commissions and the arrogance that we used to see, but you still have a handful that are out there that are charging way more than everybody else. And whenever you challenge them on it, they say, well, you get what you pay for. And it turns out those are the brokers that are exactly this list. They're not trader friendly. They're limiting your abilities. They're kind of incompetent when you get on the phone with them. So stay away from the really high commissions and the brokers who act like they're God's gift to the planet, because guess what? They're not. They're not at all. And then my last one is, this was probably controversial, free trades. Free trades. All right, so I got to do a little rant here. Free commissions aren't inherently bad, but from the time I first started seeing these, which I think probably started around the time Robinhood came on the market, from the time I first started seeing these, I had a little yellow flags that went off, and I said, wait a second, there's a problem. Because here's what I know about business, because I'm a business guy, I'm an entrepreneur. I understand how business works. And if the product is free for you, guess what? You are the product. You say, how can that happen? I'm placing trades, and what am I a product for? You are the product for the market maker. So this really came to light recently with the whole Gamestop chaos that happened, and Robinhood locking down accounts and not letting people trade and stuff. And here's what we discovered. What we discovered is behind the scenes, these brokers are getting paid a kickback. They're getting basically their commission fees that you used to pay. They're getting them paid by the market maker. So the market makers are funneling to them a little bit of the spread, what we call the bid-ask spread. They're giving them a piece of that in exchange for volume. So you are the volume. You are the customer who's actually placing the trade. So Robinhood or whoever the broker is they're funneling that money. They're funneling those trades over to the market maker. The market maker has the volume. That's what they want. That's how they make money. They make money by moving trades, by moving shares and making the spread. So that's how a market maker makes money. And basically what they did is they made some backroom deals with these brokers, and they said, hey, if you'll funnel your volume to me, then I will give you a percentage of that. Then the brokers were able to turn around and say, hey, we don't have to actually take money from the customers. We'll tell the customers it's free, and we'll get as many customers as possible. So here's what really happens. Whenever you look at a broker like Robinhood, who's out there promoting free trades, what they're really saying is, I'm the marketing wing for the market maker. I'm going to go out, get a whole bunch of customers, and I'm going to push all that traffic over to the market maker. Now, you might not think there's a bad thing about that, but there is something in your order form for most brokers where you have a selection, and it is a best bid, best offer selection where whenever you're placing your trade, your broker, because remember, they are your intermediary, your broker is supposed to take you to the best market maker platform where you're going to get the best bid and the best offer. But if the broker's getting paid from the market maker, they're not working for you. They're working for the market maker. And we saw this come to light with Robinhood when basically the market maker said, hey, stop serving your so-called clients and customers and start serving us because we're the ones that are paying you. And my understanding, I haven't looked at the numbers, but my understanding is Robinhood made like $100 million in the first quarter of this year. From those market makers. So if you're not paying for your trade, somebody is. That means if it's free for you, guess what? You're the product. And that's why I'm really not a fan of free trades. So, what do we do? Do we just go out and pay a lot of commissions? Well, I think that we're probably going to see some stuff happening regulation-wise pretty soon on this. I hope we see that. But just remember, if your stock trades are free, brokers got to get paid somewhere. So you might dig a little bit. Make sure that you can actually go in and specify that you want the best market maker, the best bid, the best offer, and make sure that you're not just getting your trades routed to whoever, because that's who's paying your broker. That's really what it comes down to, okay? So this is, what makes a bad broker. Now the question is, what makes a good broker? And basically it's the opposite. Number one, they need to be trader friendly. Number two, they need to have reasonable commissions. And I think, $1 is reasonable. I don't have any problem paying $1. I don't have a problem, Tradestation for years for stock trades has been a penny a share. I don't have a problem with that. Stuff like that is very reasonable. But when in the old days, we used to pay $20 or $25. I remember when I very first started trading, most online brokers were charging $29.95 per direction of the trade. So that was $60 in and $60 round trip, I should say. $29.95 to get in, $29.95 to get out. Whenever you wanted to place a trade. That was, 20 years ago. So today it's a lot cheaper. So I never have a problem paying broker commissions today, because I remember the old days. But just remember, if it's free for you, then you are the product for someone. So, some reasonable commissions make sense. That's probably going to be a good sign of a good broker. Next, you want your broker to understand the trader's world. They need to be trader friendly. They need to understand your world. They need to think like a trader. Think like a trader, not like a broker. Because when brokers start thinking like brokers, they only look out for the broker. When they think like a trader, they're looking out for you. Remember, they are your intermediary. Next, this is a big one for me. Good broker is going to let you do your strategies. Your strategies. If they're sitting there trying to limit your trading opportunities, then who's to say that you're not qualified? I absolutely hate that whenever they say, well, you don't have enough history, you don't have enough experience with this, and so then they go limit your trading ability. And I'm sitting there like, I train these people. I know that they know more than your brokers know, your customer service reps. Give them the permission to trade these strategies. So, if your broker is limiting your strategies, go shopping. Go look for a different broker, because a good broker is not going to be limiting your strategies. And then finally, they're going to have helpful customer service. The brokers that I work with, their customer service has been very helpful for me. I rarely have to call them, but when I have had to call them, they've always been very, very good to me. And so that is a good sign that you've got a good broker if their customer service is actually taking care of you and they're doing the things that I've put here. They're trader friendly, reasonable commissions. They're seeking to understand you, seeking to understand what you need as a trader. All right. So, one more thing is maybe not the most important thing, but I add to this list, they have a decent trading platform. Now, this is actually a little bit of a gray area. It's become an area where a lot of brokers are actually trying to compete because they keep trying to raise the game of the trading platform. When I started trading platforms were not broker-centric at all. We would have third-party softwares that we would use for our trading platform, and we still have a lot of those. Whether it's something basic like TradingView, or whether it's something more advanced like eSignal, or some of these other platforms that have been built up as trading platforms that were broker agnostic. There's still a handful of them that are out there, and that's what I grew up trading on. And now what we've seen is the brokers get into the game. Tradestation being a major leader in that area. They were really a platform broker combo that really was trying to build a big platform, and now they've become a major broker player. So what we're seeing is, whether it be the Thinkorswim or, really all the brokers have some sort of a platform at this point. And so it has become a competitive way of looking at it. I actually don't use this criteria for choosing my broker. I kind of do, I guess. I think they need to have a good mobile platform. That's the one that I end up trading on more than anything, and a good web-based platform. Those are the two that I care the most about. And as long as those are good platforms that you can get what you need done with, then I think that's the way to go. As far as broker platforms are concerned, I think the third-party platform developers are way better. That's my personal opinion. But, in terms of choosing a good broker, I think this is a consideration point. Do they have a decent trading platform? And specifically, do they have a good web trading application and good mobile app? Because 90%, 95% of my trades I do on my phone. And that's how I think the future is. So you want to have a great platform on your phone. All right, moving on here. Let's talk about a couple of other considerations. I'll hit these pretty quickly here. Can you trade options? If you want to trade options, your broker needs to allow that. I think most brokers are allowing options today. I can't think of any that aren't, but I'm sure there's some out there. How do they handle your retirement accounts? This is kind of a big one for some people. It's not a big one if you're just a trader, but if you're moving an IRA over, if you're moving a 401k, especially if you're trying to trade inside that IRA, how the broker works with that and allows you to move stuff in and out, that's going to be a big deal. Some of the bigger, more traditional brokers are actually way more difficult to work with on some of these issues. So how they handle retirement accounts is that can be a big one. Just, considerations. Every bit of these is, a little bit unique. Retirement account may not matter for you, but for some people it does. Margin interest. If you're trading on margin interest is a place where your broker can be competitive. Some brokers will charge a couple percent more than other brokers, and that can add up, especially over time if you're using a lot of margin. So margin interest is definitely another consideration that you might put in your decision-making process. And then, here's an interesting one. That is the available investment vehicles or markets that are available to trade. For example, Tradestation also has futures that are available, and now they're adding cryptocurrency. Thinkorswim also has futures, and these different brokers offer different instruments that are available to trade. When you go to the more traditional brokers in particular, they're pretty much going to be pretty strict with stock and sometimes options. And so I like to use the trader-friendly platforms, which I'll mention in a moment, where they offer a lot of different stuff. And if you want to trade futures on their platform, it's available, and you can actually go do that. If you want to trade Forex potentially, might be available on that platform. Not all brokers offer that, but a handful do. And, now cryptocurrency is coming on as well. So, those are different vehicles, different markets. Maybe you're not interested in alternative markets, but if you are, that's certainly something that you might consider whenever you're choosing your broker. And then maybe the most important one here is your initial funding requirements. I say it's an other consideration, but for some of you, this is a big deal. Several years ago, if somebody wanted to open a Tradestation account, they had to have $5,000 to get started. And for some of you, that's too much money. Today, I think most of the major brokers have lowered that down to about $500. I know Tradestation has, and that's where I send a lot of people. But I think interactive brokers may still be at the $10,000 mark. So if you don't have at least $10,000 to deposit, then they're not a good broker for you. So look at the initial funding requirements, and some of these brokers, I think most of them are at $500 today, but that may be a consideration for you if you're limited on capital, because obviously if you don't have enough money to fund the account, then you can't trade with them. I will say this one thing about funding. If possible, fund with at least $2,000 so that you can get a good margin account and you can actually be qualified for that. That's the only thing I'm going to say about the funding right now. But in terms of initial minimum funding requirements, I think lower is better because it makes it an easier entry for you. All right, so let me give you my recommendations. These are the brokers that I personally work with and or my students speak very, very highly of, and these are the winners in my book. And let me give them to you. Number one is Tradestation, and the reason that's number one is because that's the one that I work with. And I've been trading with Tradestation now for maybe 7 or 8 years, and I made the switch whenever Schwab bought up a broker that I used to trade with called Options Express, and they kind of killed that. So they messed up Options Express. I needed to find a better broker. I made the switch to Tradestation. I will say this, even though they have a really great desktop platform, I rarely use it. Sometimes I do, but I very rarely use it. I do almost everything on the mobile app on my phone, and I do some of it on the website-based app. Very infrequently do I have to log into the desktop, which is quite overwhelming. And I'll say that it's quite overwhelming. There's a lot going on there. But for those of you who maybe looked at Tradestation, you thought, it's too much. Look at their mobile app, look at their web version, and those are very attainable and very, very good platforms. The next one that I recommend is Thinkorswim. I have a lot of students that love Thinkorswim. It's a very built-out platform. You can do anything that you want to do on it. The only downside of Thinkorswim, I think at this point, besides being a hefty platform that's a little bit overwhelming, the only downside at this point might be the fact that Schwab bought Ameritrade not too long ago. And if they follow their previous acquisitions, they will mess this up. Sorry, that will happen. So let's see where it goes. But right now, as of today, as of the time I'm recording this video, Thinkorswim is a major player. You can do whatever you want there, and it's a good alternative, especially, or I should not say especially, but in addition, those of you in Canada, if you're in Canada, you can open a TD Ameritrade account there, and you can get to the Thinkorswim platform through that. So that is a good alternative for my Canadian friends. One that I'm recommending a lot is Tastyworks. This was developed by a man named Tom Sosnoff, and he's actually, coincidentally, the same guy that developed Thinkorswim. This is his latest work, Tastyworks. Coincidentally, they also recently just sold in the last, from the time I'm recording this video, in the last couple of months here. But very, very options-friendly platform on Tastyworks. And if you're an options trader, that's definitely a platform for you to consider and a broker for you to consider. An additional broker that seems to work really, really well for a lot of people, I don't have firsthand experience with them, but that is Interactive Brokers. I know a lot of people that love Interactive Brokers. My understanding is if you're Canadian, you can open an account with Interactive Brokers. They're actually open to alternate platforms as well, so you can interface other platforms with Interactive Brokers. So that's a really good place for you to consider as well. And then the final one on the list is a kind of a boutique brokerage. It's called Tradestation. And this is a broker that has a really unique philosophy. They hit all the criteria that I've mentioned, first of all. But their philosophy is, instead of us building a platform, we're going to let you bring your platform. And so they interface with lots and lots of third-party platforms. And they've even got a list on their website. At least they did the last time I looked. I didn't look before I recorded this video, but it's probably still there. But they have all these different platforms. So if you're working with Motive Wave, you can interface that with Tradestation. If you're working with, just name the platform, and there's a good chance that it will interface with Tradestation. And what Tradestation does is they bring you to the table, but you're responsible for your platform instead of them being responsible for it. And for some of you, that might be a really great solution. Their commission fee structure is very competitive. It's not outrageous, and it's just a good alternative for some of you. I will say this also, on this list, I think Tradestation and Thinkorswim are the only two that offer a virtual trading platform. So I could be wrong on that. Tastyworks might offer that. I don't think they do. Last time I checked, I didn't see that. So this is my list. Doesn't mean that it's the absolute perfect list, but what you might notice is several companies that are not on the list, and that may or may not bother you. I don't know. You might be sitting there thinking, well, I didn't see my company. Does that mean they're bad? And the answer is maybe. They might be on the naughty list. Definitely some of the major brokers that you don't see on the list are not there for a reason. I'm going to call them out. Fidelity. I don't know a single person that's happy with Fidelity. They have, I think, literally around 14 million trading accounts. I'm not making that number up. And I've never met a happy Fidelity customer. I mean, I have family members that have been with Fidelity, and it was a bear to get their money out. I've had customer after student that we had to fight to get their money out of Fidelity. So I do not recommend Fidelity to anybody. And if anybody does recommend Fidelity, they lose my respect instantly. Okay, that's my total opinion. It's just how I feel about it. Schwab's an okay broker. They tend to mess up everything they touch. They destroyed the Options Express platform. They've been on an acquisition, just left and right, and they're just getting bigger and badder, and I think they're probably the biggest at this point. I haven't looked at accounts, but after the Ameritrade acquisition, I'm sure they're the biggest behemoth of a broker that's out there. They kind of were before. So, maybe Schwab's okay. I don't know. I haven't had good experience with that. Some of the others that I didn't mention, like E-Trade, their platform's pretty decent. You can probably get what you want done there. A lot of these brokers over the last many years, they just keep consolidating and selling and merging and getting bigger and bigger. And generally speaking, the bigger the broker is, the less quality they are and the less trader friendly. So I like these people that I put on the screen. That's all I can say. I'll put them back up there. These are the ones that I like. Tradestation is my personal broker. That's who I trade with. Thinkorswim works well. Just being acquired by Schwab, we'll see what the future is with that. Tastyworks, very trader friendly. I mean, these guys are trader friendly. They are in the trenches with you. Interactive Brokers, they're more on the kind of the dealer side, so they're a little bit more highly sophisticated, I guess you could say, instead of focused on the retail trader, but still a very good broker. And then Tradier, they're kind of willing to be in the trenches with you as well. So these are my recommendations. I hope you like them, and I hope this video has been very useful for you. And listen, the next step for you, if you haven't done it yet, you need to think about taking the Pick Winning Stocks Challenge. Pick Winning Stocks Challenge is the entry for everything that I do. And when I say it's the entry, I mean, this is where you start. This is the next thing. So if you're looking to take your trading to the next level, Pick Winning Stocks Challenge is where you start, because why? Everybody wants to learn how to pick a winning stock. So what you're going to learn during this challenge is you're going to learn things like how to pick the direction of the trade. I'm going to show you which strategy to trade and how to trade those strategies, when to trade those strategies. I'm going to show you how to manage your risk. I'm going to show you how to write a trading plan exactly like you need to write the trading plan, how to choose a stock to trade. You realize not all stocks are great to trade. I mean, we got between 3,000 and 4,000 stocks that are available to trade. Are any of them okay? Can you trade all of them? Well, technically the answer is yes, but how do you know it's a good stock to trade? We're going to cover all of that. In other words, it's everything you need to know how to pick a winning stock. Hence the name, the Pick Winning Stocks Challenge. Now you say, what's the challenge part? Here's the challenge. To transform your trading in the next 21 days. This is a 21-day challenge. That means 3 weeks from now, 21 days from right now, whatever time, day it is for you right now, count 21 days in the future. And 21 days in the future from right now, your trading can be totally different because you have actually gone through this process and you've learned how to pick a winning stock. So if you're interested in this, now's the time to get started. We've got a new 21-day challenge starting. You just click below the video. I've got some links down here, and you can get yourself enrolled in the Pick Winning Stocks Challenge. I would love to see you there, and I know it's going to take your trading to the next level. All right. In addition to that, what else should you do? You should subscribe. If you want to learn some more stuff, just subscribe to my videos here. I got some links below. I got a link to my website, trademaestro.com. I got the 7 secrets, which is a 7 trading secrets, a little mini course I put together, and I'll send you those videos if you want them. All of the links are right down below here. And of course, subscribe, like the video. Just get ready for some more, because I got some more coming for you, all right? Hey, thanks for watching. Hope you've really enjoyed it. And until next time, happy trading to all of you.